Hello everyone, welcome back to my channel. I am Aji and it is now Saturday, August 30th, 25th Beijing time. The days for major indexes have turned around and fallen, with semiconductor stocks experiencing a collective plunge and the Nasdaq experiencing the largest decline. Today's performance of the Dow Jones Industrial Average and Russell is better than the overall market. What has happened to the market? Is the market going to cool down? Can I buy it? I will focus on explaining later, including semiconductor indices, important individual stocks, technology weights, and the S&P index. How to proceed? Let's first draw a conclusion here. Don't panic, buy some and wave your hand. Before explaining individual stocks and the overall market, let's first take a look at the progress of some important news. Firstly, the hearing of Cook's lawsuit against Trump by the Federal Reserve did not result in a final ruling. Both parties have been requested to provide more documents next week. We see that the chaotic trend of the Federal Reserve continues to put pressure on the US dollar to decline. There is also the yield of 30-year Treasury bond, so the market requires a higher risk premium. So today it has risen by 0.98%. And the yield of short-term bonds has fallen under the expectation of interest rate cuts. The yield curve has become steeper and the risk aversion has increased. Therefore, today we see that gold and silver have set new highs in recent closing prices. Additionally, there are two more important pieces of news today. The first news comes from today's afternoon. The United States Court of Appeal ruled that most of the tariffs Trump collected were illegal, and found that his collection of these tariffs exceeded his authority, but this was not the final decision. I will briefly review the entire process of the lawsuit with everyone here. In May this year, the International Trade Court ruled that the state of emergency declared by Trump was beyond the scope of the International Emergency Economic Rights Law. The court has issued a general injunction on tariffs, but it is temporarily suspended during the appeal period. You can still collect the tariffs that should have been collected. So the scope of application of this general prohibition is not limited to the plaintiff in this case, but almost involves all tariff products. Then the government filed an appeal. Today, the Court of Appeal upheld a previous ruling of the International Trade Court, believing that Trump had wrongly invoked emergency laws to levy tariffs. The appeal judge sent the case back to the lower court to determine whether the bill was applicable to all people affected by tariffs or only to the parties involved in the case. The court also ruled that the tariffs remain valid during the appeal period, meaning they can continue to be collected. Today's ruling has extended the suspense of whether the entire tariff will ultimately continue to be maintained. It is expected that this case will be submitted to the Supreme Court for a final ruling on whether to collect tariffs and how to collect them. It is expected that there will be a relatively long lawsuit afterwards. There is one more thing that is not very good news for consumers. Today, there is an exemption for foreign goods with a value below $800. The latest news is that the government has canceled the minimum exemption for China that was previously lifted in May. So today is for further action. Currently, all foreign goods with a value below $500,800 worldwide are not eligible for tariff exemptions. The affected goods include clothing, cosmetics, small appliances, as well as various electronic products, including drugs from Canada and food from Europe. Trade advisor Navarro said that today's measure could bring in an additional $10 billion in revenue annually. However, the market expects prices of various commodities, especially small ones, to rise. How much of these costs will ultimately be passed on to consumers? I still can't figure it out now because we have discussed tariffs before, and in fact they are jointly borne by three parties. It just depends on how much profit your company has in the process of operation, which may be borne by the exporter, the importer, and the consumer. Ultimately, it depends on the profit ratio of the product itself. Okay, there are still several important news tracks here. Also, let's take a look at today's data. The important data for today comes from the PCE price index for July in the United States. Overall, this data is in line with expectations. The overall month-on-month growth was 0.2, lower than the previous value of 0.3, and a year-on-year growth of 2.6%, which is consistent with the previous value and expectations. the core indicator has increased by 0.3, consistent with the previous value and expectations. The year-on-year growth of 2.9% is also in line with expectations, but higher than the previous value of 2.8%. In addition, the supercore indicator increased by 0.4, higher than the previous value of 0.2%. The acceleration for the third consecutive month has raised concerns about the stickiness of inflation. The only reason we can dispel this concern and calm the market now is that the impact of tariffs on inflation is one-time and temporary. From a market perspective, inflation optimists believe that the inflation of core personal consumption is expected to continue to rise briefly, but will peak at 3.3% at the beginning of 2021 and then fall back to 2.5% by the end of 2021. So this path will allow the Federal Reserve to significantly relax policies in the coming year to support the labor market. And it is expected that interest rates will be lowered by 75 basis points this year. And there is a possibility of further reductions of 50 to 75 basis points in 26 years. This is currently a relatively optimistic view. Another piece of news is that Federal Reserve Governor Waller has delivered a speech, reiterating his dovish tone and expects further interest rate cuts in the next 3 to 6 months. He believes that the current interest rate level is 1.25% to 1.5% higher than the neutral rate. Let me share my opinion on this. I would like to briefly discuss whether the market analysis I just gave you is a dovish view. In fact, whether the market believes it or not ultimately depends on the statements and bets of the funds. For me personally, I currently hold a wait-and-see attitude towards the path of interest rate cuts. If we cannot escape this year's interest rate cuts, it is already evaluation.s for how to lower it next year. It is still too early to judge. Because if inflation continues to rise, the labor market will start to decline next year. This is a matter of balancing the two sides. For anyone, it is not a simple question. Okay, in addition, the employment and non-farm employment for August will be released next Friday. At present, it is expected that the increase in new employment will be relatively poor, supporting the Federal Reserve's decision to cut interest rates in September. Okay, now let's start talking about the overall market, semiconductors, individual stocks with weights, and so on. Let's first talk about the Philadelphia Semiconductor Index. Today's FEI-Ben index has a total of 30 constituent stocks, with 29 stocks falling and only one rising. Almost wiped out the entire army. If you insist on seeking any news push, it is Alibaba's financial report and the Wall Street Journal. There is a report that Alibaba has developed a new artificial intelligence chip that is more powerful than the old chip and may begin to fill the gap left by regulatory barriers encountered by Nvidia when selling products in China. Of course, this is a media report. And as I mentioned, if you insist on finding reasons for the decline in semiconductors, then this may be one of the reasons. Okay, after talking about semiconductors, I will give you a summary of the current situation. What should we do and what do we think? What time is it? The first point is that nowadays, companies that have risen significantly, such as those with good growth, tend to buy during the decline. This is a major premise, and the reason is very simple. The entire second quarter financial report has come to an end, and we have seen the performance. The semiconductor growth market, which is led by performance, has not yet finished. Therefore, if you look at semiconductors, such as those that have already gone relatively high, then if you fall, you can exchange chips for a healthier trend. If there is an opportunity to buy at a low price, wait for the next round of rise. If there is no chance, then forget it. Then there's no way for you to chase after the high, and it's not easy to catch up in this place now, so I only talked about buying points when it falls here. Without saying that it will fall immediately, if it falls tomorrow, it will definitely fall somewhere the day after tomorrow. Please be sure to distinguish clearly. This is an opinion that I am waiting for, and I hope it will fall so that I can find a comfortable buying point after it falls. Okay, the second one is where to buy reasonably. For example, the SOX half-price index fell by 2.86% today. If it continues to fall in the future, there are 3 strong supports, all of which are long-term buying points. The retracement from the market price to the first 233 is approximately 5. If the pullback reaches 222 and below, the magnitude of the pullback is approximately 10%. If the drawdown is very large and can reach the range of 204 to 211, then the drawdown is approximately 15% from the market price. So for the index, a pullback is already quite significant. What does it mean? Even if it's just a simple pullback, the general pullback of a stock should still be above 5%. Because if the semiconductor index retraces by 5, you can imagine that individual stocks will definitely retrace, and most of them should be above 5%. Okay, so let's talk about a few things about the semiconductor industry. Currently, it is still relatively profitable in the entire manufacturing industry chain. We have talked about the AI industry before. It is obvious that there are several manufacturers who can predict who is making money in the semiconductor industry. They must be making money. For example, if we assume from the current market price that Nvidia can fall below 169 yuans, it will drop to the buying point of 159 and below. How much does the market price need to drop by at this level? It will drop by about 9. This is a relatively good position because I also expect to buy at 159,156. Because I have mentioned that the price range above 169,174 is a radical level. So it's not enough if it doesn't fall below this place, but I won't chase after it either. If there is an opportunity to fall or buy at a low price, I will go buy. The judgment is based on his current fiscal year trend and forward valuation. Fiscal year January 27, we usually trade in the market for 6 to 12 months, which means his current trading price should not be lower than 172 yuans. If it is lower than 172 yuan, it is suspected of being undervalued. So it should be between 172 and 200. Which is why there is a view that 159 and the buying point below are more reasonable positions. Because 169 is a technical support. If it falls below it, it will accelerate its downward trend and there is a chance to buy it. Overall, it is a comprehensive view. I don't know if it can fall. But I want to emphasize again that I am not saying it will definitely fall. Because if it just falls to the support now, it will be bought next week. Many fund friends don't want to give low buying opportunities at all and enter the market early. Which is entirely possible. This is the situation of Nvidia. Okay, let's talk about MD again. If the current market price of MD goes down, let's assume it falls below 153 yuans. Because this is a key position to maintain the upward window. If it doesn't fall below level 1 for 3, it's strong support by some. From a technical perspective, its decline is expected to be around 12. Just now, Nvidia's decline was about 9 and it is around 12. This is also reasonable. If we look at the declines in several positions on stocks just now, it is possible. I can only say that it is possible. If it only falls to around 153, then it's probably not more than 10% or 5 or 6 points, and it won't fall much. If it can't break through this place, there's nothing we can do. For example, the situation of TSMC is actually quite easy to see, and it has also fallen by 3.11% today. If it continues to decline, it can fall to the moderate support level of 216 and below, which is a drop of about 6, and then fall to the level of 207 and below, which is about 10. These are also good long-term buying points based on the index. In terms of forward-looking valuation. A median of 209 and a median of 240 next year are also good buying points. There is also the situation with ASMA due to the uncertainty of the 26-year outlook. As we have discussed his financial report before, we assume that it will not go bad, that is, it will not completely deteriorate the technical aspect. It fell below the current support and reached the next strong support level of 690 and below, which is around 8%. So, similar to the index, the decline is also similar, which is completely reasonable. These are some positions with potential buying opportunities. But ASML once again emphasizes the hidden concern of its uncertain 26-year outlook because this is what the financial report management said, not what I said. As we have written here, there is a variable of 10% in 26 years. It is not quite the same as TSMC, which can control profit margins by producing energy and raising prices. However, ASML's customers are TSMC. TSMC can temporarily stop buying lithography machines or suspend purchases, but still use existing production capacity to improve profit margins. These two are slightly different, so ASML's situation is slightly more complicated. So these are a few individual stocks at the top of the semiconductor manufacturing end, or in other words, at the opposite end of the physical chain. Because there are many other individual stocks, we will talk about them slowly next week when we have time. Today we won't be able to talk about so many good things. Next, let's talk about their opinions on a few weights. First of all, Tesla was very unlucky to encounter semiconductors. Today, technology stocks experienced a collective pullback and fell below 337 again. It seems that we need to grind it down again. What kind of perspective? Still the same viewpoint, the upward trend before falling below 314 remains unchanged. It just needs to slow down slightly. Many friends will ask me if I have done spread speculation after the previous breakthrough in 348. I have already told everyone that I have done it. My expiration date is October 17th because the monthly option period in September before the middle is too short. And there is a long end of the week in between. In addition, September is a traditional weak season, so I put it for a longer period of time until October 17th. The second leg is priced at 380 yuan if Tesla falls below 314 yuans recently. The probability of my option speculation making money is extremely low, and then the speculation will fail, but it's still early, don't worry about this issue now. Okay, let's assume again that if it really falls below 314, what will happen? I have told everyone before, and I will go to the lower position to oscillate. I will first look at 296 to 273 and then look at 265 to 234 after breaking. So if this place falls below 314, it will enter the buying point of my long-term position. Didn't I buy a long-term position of over 290 before? Didn't you buy enough? If the rest falls below 314 again, then my long-term position will be on the road normally. Okay, I'll make this clear to everyone, so I'm doing both things. Speculation is speculation, and long-term is long-term. Okay, this is Tesla. Let's talk about a few other companies like Google and Microsoft. Not to mention Google, because it is still rising today and is still favored by funds, becoming a safe haven stock. Microsoft said yesterday that it had fallen below 502 yuans and wanted to make a small head. Today it has hit a low of 500 for yuans and has been bought up, but it hasn't fallen too much. Let's talk about Meta. Meta is currently between 685 and 735, and this strong support is quite strong. We assume that it can fall to around 700 above 685, which is actually around 5 or 6 points. The decline is not significant and the overall market is similar. If it wants to fall, I will check with everyone where it falls at 5 points and where it falls at 10 points. Therefore, this is Meta. Of course, if Meta falls below 685, the market's S&P may not only fall by 5 points, but it is estimated that the S&P will head towards 10 points. Okay, let's take a look at how Apple has fallen to around 215. The first support is probably around 7%, which should be around 6% to 7, almost equivalent to the overall trend of the market. A position where the market falls about 5 points downwards. Almost all of them can find weight support. Okay, if Amazon's position falls below 220, it will enter a volatile zone and fall to the next support level of 213204, which is about 7%. Okay, the positions I marked above are actually potential long-term buying points, of course, the first buying point. It doesn't mean that all your positions are bought in one place. So here we need to compare with the overall market and take another look. The current situation of S&P is 6,460 points. If there is a pullback in S&P, how much can the first pullback drop to the first strong support around 6,100 points? That's about 5. So if the S&P falls to 5 around 6,100 points and 6,000 points, then almost all of the 7 or 8 point declines in the stocks I just mentioned can be achieved. Okay, this is the first one. If it falls to 5,700 points and then falls to this strong support level, it will probably fall by about 10, which is a pullback. So there should be a 10% to 15% decline in individual stocks. But that's almost it. We talked about the outlook for S&P last time. Previously, S&P had significantly lowered its forward expectations after April, but now it is gradually increasing again. Therefore, before the point rose, it was at the lower limit of 5,100 and 5,000 points. Now it is gradually rising to around 5,200 and 5,300 points. Which means you can say the lowest. You may say, I want to see 5,000 and 5,500 points. Can you say that this actually drops to 5,500 points? We can simply observe what kind of situation will happen if the market price drops to 5,500 points by 15. Is this a very large pullback of 15%? Generally, a decline of 15% is relatively rare, but we say that a 10% drawdown is not uncommon. According to history, the S&P has an average drawdown of 10% or more every year, but what about a 5% drop? It often happens 3 or 4 times a year. So a 5% drop to 6,100 or 6,000 points is not too difficult. We should be reasonably patient and wait. Don't think that we can't fall again. In September, it rose again to 6,700 points and went up to 7,000 points. You may have this opinion, so let's patiently wait for September. If we really don't give the opportunity for a price drop, what can we do? What can't you do? You can only say that if you overestimate and continue to reduce your holdings. Because time runs too fast, it will only delay the risk. Therefore, this is my rough view of the overall situation. I hope that the market will have a good pullback. Because I have many individual stocks waiting to get on the market, only when they fall can they get on the market. If they don't fall, there is no way to keep them going. That really won't get a good value for money. Instead of waiting with stocks now, it's better for you to do something else with cash now. Your cash, including putting it in this cash account, also has interest, even if you put it in the money market of wealth management. Profit, even if you are far away and make a little profit, there is still some profit, but it does not mean that it can be completely empty. So he won't stick with the money, okay? Plus, we just saw a lot of things, including trade issues, tariffs, and many variables. The Federal Reserve is also facing a lot of pressure. In this turbulent situation, the first thing we can do is not to chase after it. We shouldn't chase after this position that shouldn't be pursued, but don't worry about a sharp drop or collapse just because there is a pullback. There is no need for fundamentals not to support collapse, especially if there are interest rate cuts and liquidity continues to be released. If it wants to collapse, it actually requires a greater deterioration of fundamentals, but the fact is that after the second quarter financial report, S&P's fundamentals did not deteriorate and it was raised. This is the most core logic, which is what we talked about today. Before the content, I should have shown you the data of S&P's performance increase after the second quarter, right? Nearly half of the companies have raised their performance, while only 14% have lowered their performance, which is on par with the lowest level in history. Therefore, this is why it is possible to buy good companies at low prices. Declining companies are viewed differently by everyone. I am referring to good companies that have achieved growth in performance, those that have returned to a reasonable position and have achieved growth. I am not discussing high-risk growth stocks or buying points for high-volatility speculative stocks here. What I am talking about are the current normal contents of the S&P 500 index, stocks that can be prospectively valued based on performance. Okay, today we will update and interpret some of the content about the market. We will leave more details about individual stocks for later next week. Okay, now because it hasn't fallen much at the beginning and the S&P hasn't moved much. The Dow Jones Industrial Average has also performed well, and the Russell Group has also performed well. The S&P average index also fell slightly by 0.07% today, almost unchanged, so the risk is not as great as people imagine. Okay, it's time for the weekend to announce the member program. We will update it over the weekend because the second quarter financial report has already ended. I need to readjust the entire S&P performance forecast and show it to everyone, such as the 25-year and 26-year S&P forecasts. Where should the trading position be? As well as the quarterly and annual updates of the adjusted S&P 11 major sectors and other subsectors. A total of 13 industry sectors and EPS growth rates, which sectors are capable of growing faster than the S&P, which are above the industry average and which are below the S&P average. After seeing this, everyone will know which sectors may have potential opportunities to outperform. Okay, this is our weekend member program preview. Even on Sunday, we will still update Trino's Q&A community posts. If you have joined this level, please go to the community to find a post with QA pictures and dates. I ask questions every day and reply to them with everyone. However, on weekends, I tend to hold back a bit and may wait until later on the last day to provide a unified response. This week is a long weekend, and Monday is the market holiday. Therefore, everyone should take good rest and utilize these 3 days of vacation to recharge and relax. Prepare for the 10th September and strive to provide a comfortable seat for boarding. Okay, this is the entire content of our program today. If you think my program has been helpful to you, I hope everyone can help like, comment, share, and thank you more. Then we will meet tomorrow at the same time.